Dave. I think the last couple calls, I didn't get to catch you because you've been so stinking busy.
Just came back from Hawaii, you know? I mean, we all work really, really hard. I mean, it's fun right now. Do you see what interest rates are doing? They're just like going up. And that makes me very happy because, well, you know what? I think you were going to talk about it today, weren't you?
We're going to talk a lot about it. And I hope those on this call, we had so many register. So I see numbers just piling and piling in. So I'm going to give you guys a second before we start. But if you haven't been in the business for more than a decade, this call's for you because you're going to learn really how to make it work. Like if you're a surfer, I'm in Montecito right now, and people love to surf, and people move here for the surf. I don't surf. I'm not sure if you surf, Dave, but I don't surf. But people, like, if it's not choppy waters, if it's not good climate weather, you can't get good surfing. So this is surfing mortgages, and this is where you're going to get paid so much money. But I want to start by what I just heard, that you guys, Anthony, you guys educated almost 90,000 people this year.
Yeah, 2021 was a banner year for us again. We grew about 50% over what we did in 2020. So 60,000 students in 2020, almost 90,000 students in 2021.
And a lot of that probably, I think, what portion of that is you think newer, younger loan officers versus people like me that have been around for years?
We don't have, necessarily the breakdown. However, what we can do is track the number of 20 hours. You know, people take 20 hours when they're coming into the industry, and we have thousands of 20 hours every month.
Well, I've taken all your guys' courses. I take your guys' courses every year. Like I said, it's so fun watching Anthony in his pool with his coat on and riding his scooter. You guys make education so much fun, and you guys add so much extra value to your students. I don't think, if you guys haven't gotten educated somewhere else, you don't know how good you have it with you guys. And this is the only group I'll ever jump on a webinar with because, you know, we go back, we're like family since I met you at Mastermind like 8-9 years ago. It's just been a riot, and you guys add value. And I love being on these calls with you and helping new loan officers kind of figure out what to do next when the market does something like it's been doing recently.
Because like what you and I were talking about with interest rates going up, I started in the industry when interest rates were at 18% and things like that. I think there may be a lot of folks that don't know what to do when interest rates rise and don't know how to make money when interest rates are actually going up. So I'm hoping that you have something for those people that are a little nervous, a little worried, don't know what they're going to do next. I think this is a really, really good time to make money. I really do.
Yep. I'm going to get you guys prepared. I'm going to give you a rock solid game plan. I may be even giving you guys too much today, but that's what we do, is we try and give you guys more value than you guys can handle. The market is a mindset, you guys. This market is for people who understand that you're actually running a business. If you step on this floor and you're a licensed loan officer, you're not a loan officer, you're a business owner. And these are business building years. This is what makes your business better in the long run, is working through just the everyday. And, you know, rates are rising. We understand that. There's no reason to fight it and think that, oh, maybe tomorrow's the lucky day they come plunging right back down. That's not the right mindset. The right mindset is they're rising, and like, so what? Let's work through it. So I just wanted to give you guys that confidence that this is not the first time it's happened. It's certainly not the last time that it's going to happen. And I'm going to give you guys some tools today to get your way through it. I'm Ben Anderson. I think Dave maybe had a drop on his call. He'll jump back on in a second. He'll be helping me kind of coach through this today. If this is your first webinar, welcome back, Dave, with us. There's a handout in the handout section. It's called MEC presentation. Please download that and follow along with us as we go through, because this 18 to 20 page, 18-page gift for you guys is for you guys to keep and refer back to later. If you follow this blueprint that I'm giving you guys today, you're actually following my blueprint on how I've gotten through this market. So I'll give you guys a second to download this handout, and we'll jump in. And I just think that, look, if you guys are looking for, this all comes down to your attitude, how you look at this business. And why do you guys, it's a question, and a couple of questions as we get started. Why do you guys give control to things you guys can't control? Why do you wake up in the morning and you guys look at the market, or you're watching the bonds And that changes your attitude. You're like, oh my gosh, rates are up. I'm having a bad day. You're giving the rates control over your income. You just can't give control to things you can't control. And question, Dave, you know the laws very well. You have to. When the rates go up, are banks allowed to cut loan officers' comp plans?
No,
I can't, as
no,
a builder, all of a sudden come back and say, you know what, rates are rising. You are paid 50 basis points or 100 basis points. I'm just going to cut your comp in half today because rates went up. Is that legal?
no,
Didn't
no.
think. So if your comp plan's not changing when rates change, why should your attitude change when rates change? You get paid the same as you did the day before. There's not a daily like halt on your comp plan. They're not going to say, oh, well, let's not pay you for a month because rates went up. That's not how it works. It's your attitude and how you approach the business that generates your revenue, not the interest rates. So let's jump into the handout section, and it's really about how to make money when rates rise. And I'm going to go on to page 2 and just kind of follow along, guys. So I'm going to teach you guys today one of my academy lessons. I love the academy. It's an ongoing course that I have for training new or hungry loan officers. And the great thing about the academy is I have several hundred, I think, students from MEC that have joined the academy and do continued training with us monthly. We have this ongoing thing. So I pulled out one of my best academy lessons. So if you aren't in the academy, you're getting a free academy lesson today, and it's how to make money when rates rise. And it seems like every year, there's a couple times during the year that this happens. So this isn't the first time it's going to happen this year, nor the last time it's going to happen this year. Rates are always going to rise. And like Dave and I said, you got to smile when these things happen because it's opportunity to allow you guys to make a heck of a lot more money. So to get started, I got a quote for you, and I'm going to drop this quote on Dave. I'm on page 3. Excuses don't burn calories, and excuses don't make money. And I used to be a personal trainer back at 24 Hour Fitness, long time ago. I sit down with my clients, we go over their plan. I'd weigh them in at the end of the month, and I'd be like, okay, Dave, the month's over, looks like you didn't lose any weight. Let's look at why you didn't lose any weight. How was your cardio? And Dave would say, oh, you know what?
I didn't do it.
I didn't do it. I didn't do it. I'm
I
like,
was
well,
busy.
why? He's like, I'm so busy teaching students at MEC, I just can't get to the gym. And I'm like, Dave, we're at 24 Hour Fitness. This place never closes. The excuse that you're too busy is an excuse. And excuses don't burn calories. Only hard work does. When it comes to rates rising, you guys, no matter what your approach is, if you aren't working hard, you're not going to make money in any market as much as you could. I know in your school of thought, Dave, and your team, you guys were number 3 when I first met you. I'm pretty sure you got to be number 1 without making excuses. So what's the mindset from your team, and what kind of challenges do you face? Like, 'cause you don't face maybe rate challenges, but what are some of the challenges you face in your business, MEC, that might be equivalent to rates rising, and how do you guys face those challenges?
How do we make it better? How do we do stuff that's better? I mean, nobody, honestly, nobody wants to attend CE. Nobody wants to do it. Let's be real. And so, when you have an Anthony Johnson, in his suit jumping into a pool, when you have, different things to break it up, you got to do something maybe different. You got to have a plan, and you got to execute on that plan on a daily basis. If you are not, measuring and tracking results and trying to get better, then I think you're making excuses. I don't mean to be mean or harsh or anything, but that's what happens. Is you're right. You're absolutely right. You're making excuses. If you don't have a plan and you're not following your plan and not adjusting your plan and not, making that a higher goal, then you're going to be susceptible to whatever the heck the market's doing.
I love that you said having a plan. So let's give you a plan when rates rise. So I'm on page 4 in the handout right now, and there's 3 ways to make money when rates rise that I know of. And what you just said is the exact same thing I was thinking when I wrote this. Number 1, having a daily call and daily follow-up plan. Number 2, having a daily call and daily follow-up plan. And number 3, having a daily call and daily follow-up plan. What do you think?
I think you're saying the same thing, which is the recipe or the secret to success.
A daily call and daily follow-up plan. So if you're getting in the office as an originator, and the first thing you're doing is, all right, let me check my pipeline. Oh man, these rates are making my yield go down. The extension cost on that borrower is going to be too much. Are you following a daily call and follow-up plan, or are you following a panic plan, which is getting in the office and panicking over the rates you're going to lose or what's going to happen? You can't control the rates. Don't give rates the power. Now, part of it is learning how to sell around certain circumstances, but the other part of it is you can't control what you can't control, but you can control your daily call and follow-up plan. And there's 3 tips to start with. I'm on page 5 right now. So know the market. Don't watch the market. Know where the bonds are, know where the yields are, just so that you're educated. But don't watch it throughout the day. How many of you, and be honest right now, have the open ticker, whether it's like an MBS highway or a bond report or the 10-year treasury, and as that thing slides up and down, or as you get emails about rate reprices, how many of you guys let that change your mood? Just be honest. How many of you guys sitting here, whether the bonds go up or down, your mood goes up and down with the bonds? How many of you guys? What do you think, Dave?
Unfortunately, I think there's a lot of folks that we can't control it. You can't control the stock market. You can't control bonds. You can't control what Federal Reserve is going to say or not say. Are they going to be dovish? Are they going to be hawkish? You don't know. The thing is, you cannot control it. So like you said, Ben, don't give it, whatever it is, the power.
And I think people would probably say a lot of the same things about you as me. You're always so mellow. Anthony's always so mellow. I've been called very mellow quite often. You just can't get rattled and you can't get too excited, because the energy that you expend, if you're, let's say 50% is like mellow, and something goes really good, that's 100, and something goes really bad, let's say that's 0, it takes so much energy to come back to 50%. Your energy has to be spent on things I'm going to show you in about 5 minutes, not on what gets you wound up with the market every day. You got to, number 2, realize that experts make more money when rates rise because there's less people fighting for the business. Because what this does, it takes the fight out of people. It takes the chase out of people. It takes the enthusiasm out of people that are your peers. And while they're getting worried or frazzled or getting wound up or wound down, and if you stay steady Eddie and just do the disciplines I'm going to show you in a little bit, your comp plan doesn't change. So why does your attitude change? And lastly, a tip to start with is realizing a new market will be born out of this. Where there's a bust or a boom, there's a boom or a bust. And rates will rise and they'll fall. And when they do fall again, there'll be more opportunity if you do the disciplines to build a business through this. So when I started by saying you're running a business, you're not a loan officer, your job is to build a database of more clients. And if you sell through rate rising, let's say rates go to 5%.
It's still fabulous. 5% is wonderful.
Yeah. What was your rate when you first got your house?
You know, on my appraisal, the appraiser wrote, with interest rates at 10.5, this home should not sit on the market very long. That's the actual comment that the appraiser wrote.
Okay. So you've been a man about the business. How long have you been in the business for?
Over 40 years.
How many mortgages have you done for yourself personally in 40 years?
7,000. I mean, for other borrowers or me myself?
For the Luna family.
Less than 10.
Okay. So you've done 10 in 40 years. It falls right in line with what I say. Every 5 years, someone's doing a mortgage. So if you think about having a client that you do what I'm going to show you in a few minutes, and that you stay connected to the client over the next 40 years that you're doing mortgage, the people watching this call, that client's going to give you 10 mortgages. As if rates never changed, if they stayed at 2% for 40 years, you'd never have a chance to do another mortgage, probably for most of those clients. But the fact that they go up and down, up and down, up and down allows Dave to do more mortgages, because sometimes when they go up and down, Dave's taking cash out, buying more properties, reinvesting. It's a capitalistic mindset of, I want to capitalize on the best opportunity for you. And where there are changes, there are opportunities. Let everybody else struggle or worry. I'm going to have a daily call and a daily follow-up plan. So let's go on to the next page, and I'm going to give you guys some keys to start with. There are 5 keys that I'm going to go deep into detail here, but if you can really follow these 5 keys, you will be different than everybody else. And the reason why MEC is so good is they just do things differently. They're experts. And this is where the cream has to rise to the crop, and the winners will be at the top. So the first key, and I'm going to walk through this, is, and if you follow this, you're going to succeed past your wildest expectations. I know this because I know exactly what the top dogs are doing. I coach them, and I can tell when people are following the recipe I give them because the result is there. And if you follow these 5 steps, the result's going to be so there for you guys. Now, what you must do first in key number 1 is log every single call into your cell phone, into your CRM, and into social media. So if you meet a new client today and that client's in your cell phone and you don't save their number, giant mistake. You must save their number in your cell phone and how you met them. Referral from Dave Luna, for example. Then that client's got to also go in your CRM so that you can track them for the next 40 years, like Dave said, and get the next 10 deals from them. And finally, you guys must invite them into your social media. So at the end of every single day, you talk to a new client, you've got a Facebook friend request them, follow them on Instagram or any other platform that they may be on. Then let's say that, Dave, you play client for a second, okay? You referred to me or I talked to you about getting a mortgage. Purchase, refi, doesn't really matter. Put you on my cell phone, you're in my CRM. Then you get a Facebook friend request from me that says, hey, let's be friends. And then I text you at the end of the day, hey, Dave, great talking today. Look forward to helping you find your home. So we can stay better connected. I also Facebook friend requested you. Let's stay connected personally. How would you feel about that originator that takes the extra step? And what would you do if you saw their Facebook friend request pop up?
I think everybody wants to be connected. I think people, I don't know anybody that has too many friends. And so I would think of it as a compliment and go, oh, wow, this person's reaching out to me. Sure, let's connect.
And if you're someone that is shopping around for a mortgage and the 3 quotes you get are from an email with a signature line, there's no personality. And all of a sudden, because I think as loan originators, we think that borrowers understand what we're telling them. They really have no clue most of the time what we're talking about. And the experts of the experts in like the medical field or attorneys, I can tell you firsthand, they don't really understand the way mortgages work. There's no school for it. So how would they learn about mortgage, especially if they're a first-time home buyer or a second-time person doing a refi? How the heck do they know about mortgage? What they've Googled for a minute, all these opinions? No, they're gonna go with how you feel, how you make them feel about the mortgage, not the mortgage that they're doing. If they feel like, wow, this guy really is trustworthy and he makes me understand the simplicity of it all, and he's a real person, I'm gonna go with that person. And if they can look you up and touch you and feel you to be a real person, all of a sudden they care less about the terms of the mortgage and more about how you explain things to be true. And so if you connect with every client on social media and you are someone that knows what they're talking about, you have the upper hand on getting the deal versus the next client or next loan officer that simply sends them a rate quote. I can get that anywhere. I need to know what the fees are. And I'm not going to understand reoccurring versus non-reoccurring closing costs. I doubt anybody can really ever even explain what APR even really means because there's so many different variations on what changes the APR. But they want to know, can you understand my needs? Can you get me into my home? Can you be there for me if I've got questions at 8 o'clock at night? Are you a good person? Do you have a family? Are you reliable? Are you trustworthy? That's what they're seeking in this market, is someone that can give them the truth. And if you connect with them on social media, you're more trustworthy. That's step number 1. That's key number 1. Key number 2 is making notes on every call. If you think your memory serves you to be bulletproof, you're wrong. And if you're asking clients questions about their biggest need, their biggest challenge, why they're doing this, what type of down payment they want. You're going to put those notes in your CRM. So when you follow up with them, you understand, hey, here's where we last left off. Every client has to feel like they're your only client. And if you're like, stuttering, fumbling, okay, last time you're looking to buy a home, how did you find a home yet? No, that's everybody else can say that. But when you're saying, hey, I know you have 2 kids, I know your wife's pregnant and ready for a third, are you gonna make it out of your rental before the birth of your child? I know you're looking really hard, and one of the main things that you wanted to do is get a nursery built before you moved in. How's that coming? Get out there and search harder. Make those personal details in your CRM. That's why the CRM is so critical. In your cell phone, in your CRM, so when you call them next time, you have a record of all of your notes. Now, rates really matter a heck of a lot less to the client. And I want to talk about that. If clients don't really like, how many of you guys have ever had a client tell you rates are going down when they're actually going up? Think about it. Clients all the time will say, hey, I heard rates drop. And I'd be like, yeah, that's not really true. They went up 0.5 point in the last few weeks. They're like, oh, really? Why do you think that is, Dave?
I think people want to hear, or find what they want to hear. They want to hear that rates are going down, or they're hoping that rates are going down. And very much all of the time, you got to tell them where reality is at. And honestly, truthfully, and this is going to sound weird, they really don't care what the rate is. What's my monthly payment? Can I afford it? Can I get into my home? Can I get into the home when I want? As long as I can afford it monthly, like you said, rates go up and rates go down.
So you guys give so much power to things that are really powerless to the client. They care about the monthly payment. And when you tell the client, hey, I'm going to be here for life, I'm reliable, you can see me, I'm visible. And look, if the rates change during the process, you explain to the client why rates went up and how this is a long-term journey and how you're going to be honest with them for the next 40 years, they relax and realize that you've got control over the situation. Now you become more of an expert. Now, how do you get there is you have to have a daily call goal. And be honest, how many of you guys are making 10, 20, 30 phone calls a day versus, answering the phone when it rings? This is a daily call goal game. And you gotta have 4 hours a day of green time. Green time is money-making conversation time. If you guys are focused on making more contacts and spending 4 hours per day hunting for new business, let everybody that doesn't go to MEC for education worry about the rates. MEC loan officers don't worry about the rates. They're disciplined, they're not distracted, and they make phone calls and make connections. Just like you've got a connection with Dave and Anthony because they're personally involved in your education, your clients must have a personal connection with you about the mortgage. And if you're calling 4 hours a day to continue to read the connection, rates really don't matter. And the clients should know what you tell them rates are. They shouldn't go search and research rates because then they're going to get confused anyways. The payment you're going to get is this. I'm going to be able to help you. So the keys are every client you talk to in your cell phone, in social, and CRM must make notes on every call, have a daily call goal. I'm going to make this many calls per day, 4 hours per day of phone time and green time. And while you're on your phone time and green time, the 4 hour block, you can't be doing emails, chasing conditions, or doing anything else other than focusing on your sale. I love this because I'm on the next page. Dave always reminds me to bring this up every time we have a conversation. I'm going to remind you guys of one of the principles. I'm on page 7 here. It's called the 7 Ds. And the 7 Ds are the 7 reasons why clients like Dave are always going to want to have a mortgage loan officer like you managing their personal mortgage life. And the 7 Ds are death, happens to almost everybody except for a good Lord. And the death is why people are going to always need to get a mortgage, because as someone passes away, the spouse might need a mortgage, or their kids might need a mortgage, or they're setting themselves up for their plan, their will, their trust. It's a part of life. Let's face it, clients live in their homes, and at some point that home's got to transition to other people. And if you're in that client's life long enough, you can be in that conversation. Diapers. People have kids, and that's the number one reason why they want to buy a house or why they want to buy a second home or a third home. Diamonds, they get engaged, divorced, when they split the house up, they don't care about interest rates. Downsize, they sell homes and move down as they get older or when their kids go to college. Deconstruct, home projects, and people into debt. So death, diapers, diamonds, divorce, downsize, deconstruct, and debt. Rate is not on this list. These are all life events that happen. And if you've got a plan to call for 4 hours a day and keep tabs on life events, you're going to win even when rates go up. So I want to discuss some goal setting right now, Dave, and I want you to help me, and I'll keep tabs on this. I want you guys all to do this for yourselves. I'm on page number 8. Let's discuss how to get to your goals, and nothing on this list has anything to do with interest rates. So Dave, you're a loan officer now. You're going to play a role as one anyways in this conversation. You guys all play this role with me, okay? What are your goal earnings, Dave, as a loan officer for 2022?
$1 million.
Okay, I'm putting $1 million down. Now, if you follow this recipe, you'll make your $1 million. It doesn't matter what rates do, you'll make your $1 million. Now, let's talk about how many closings you need to make the $1 million. Let's break it down fundamentally. What do you earn per file, Dave?
About 75 basis points, 0.75.
And then talking about how much commission you think that is on every deal, like net commission.
Round numbers, about $4,000.
Okay, so Dave wants to make $1 million, and Dave earns $4,000 a deal. Okay, so now Dave, write this down, Dave, when you're Dave. 250 deals Dave needs. Now let's talk about your pull-through percentage. How many people do you have to talk to close a deal? Like how many apps to fund? 4 to 1, 5 to 1, 3 to 1. What do you?
My pull-through is about 70%. So if I talk to 10 people, I'll get 7.
Okay, so and let's say that you now have to talk to more people because the market's changing. Let's pull it down to 50 to be conservative and say we got to have 2 people apply for every 1 closing. So if you need to close 250 deals, you need 500 people to apply. Okay, so that's your total. So 500 applications is what you need.
Okay.
Now let's talk about how many days you're going to work this year. I know you have Park City over there, and you're going a couple of trips to Hawaii a year. How much time off do you take a year, you think?
About a month.
Okay, a month. So let's say you take a month off. So let's say you work about 200 days a year, because that's about what it equates to. It would take off 2 weeks a year. It's about 250 days a year. So let's just call it 200 days a year. Okay. So you have 500 applications you need, Dave, and you're working 200 days a year. Now that breaks down to me needing 2.5 applications every single day in order to get to your goal. And over the course of a week, you need about 12.5 applications per week. So instead of focusing on rates and all these other ornate things that are not in your control, and you get paid the same, we got a pull-through percentage, you're following along with me, Dave needs 2.5 yeses per day, and he needs 12.5 yeses per week in order to hit his goals. It doesn't matter. That's what's gonna get you your goals this year, is 12.5 yeses a week. Rates? No. Yes, 12.5 yeses per week. If you're focusing on 4 hours of sales time per day, that's about a yes every other hour. So do you mean to tell me if you're focusing on making phone calls, asking questions, building a database, being in your CRM, that you can't get a yes every other hour? Absolutely you can. The problem is you're spending half an hour trying to get yeses and the rest of the time watching the market. You're gonna miss the mark. So before we jump into the strategy, you have to understand the fundamentals of what's gonna get you to your goals. Now, let me give you the game plan. I'm on page 9. Here's the game plan that I teach in the Academy on how to execute on a day-to-day basis. What to do with your 4 hours is the next question. On Mondays, spend your 4 hours chasing down anybody that's a pre-approved or home shopper. And you're gonna build out as many people in these categories as possible. And I'll give you after this how to talk to them and what to say to them. But categorically speaking, Mondays is all about home shoppers, people looking for a home. Tuesdays, categorically speaking, is all about calling your past clients, your past funded clients. Wednesday is agent day. It's in the middle of the week or typically their week end from before is kind of over. They haven't really gone on planning on their next week. It's the best day to chase agents is Wednesday. Thursday, I call it the loans that got away. People who gave you the, yeah, let's go forward, but then didn't move forward. And Friday is your hot list. And that's a list of clients who are most likely to move forward and need you to stay on top of them every single week, or they'll go somewhere else. So this is the game, day to day, week by week. Who do you call and what do you spend your time chasing? Now, let's jump into more specifically what you have to do to get business from these categories. And page number 10, before we can jump into how to call them, it's being relentless. Dave, relentless. You're a guy that just goes for it. How important is that attitude?
Attitude is everything. Attitude is everything. If you think you're going to lose, you will. Just don't even try. You've already lost. If you think you can do it, and this is what we tell students when they go to take the test. If you think you're going to fail, just give them the money and don't show up, because you're going to fail. But if you think and you've planned and you've worked and you're ready for that test, you're going to pass it on the first try. It's no different in the mortgage business. If you think you are going to win, if honestly, truthfully, you think you're going to help people, you can't help it. You will. They can feel it.
Like, I love this. I watched this YouTube video of like Will Smith, and it just came to mind. And he says how relentless he is. And he's like, if I get on a treadmill and I'm racing you on a treadmill, two things is going to happen. You will get off first and I will win, or I will die trying to beat you and my heart's going to stop. But one of those two things is going to happen. And that has to be your pursuit of this business. It's going to test you. It's going to try you. It's not going to be easy. There's going to be times you have a loan all the way to docs. It's a commission check you've been working so hard for, and you lose it, even without the market affecting it. The client may get fired from their job or may miss a mortgage payment at the last second. Things are going to happen. How fast can you pick yourself up and get after it? And getting after it is an everyday relentless approach, right? You're not going to be the smartest person or the person with the best rates. There's always someone that's going to beat you in every category, but you can be the most relentless. It's an attitude. And if you have that approach and belief, then the next thing I'm going to show you is going to make a lot more sense. Now, on Mondays, it's one thing to call your clients who are shopping for a home and you say, hey, I found a home, and they go, not yet. And then you go, all right, well, call me back later. But can you be relentless enough to say the next thing that I'm going to show you guys? So let's say if a client owns a home, let's say they're shopping for a new home, and let's say they own a home. Do you guys see if they're to say, look, I don't want to buy my house until I sell my existing house? Be relentless in that moment and ask the client, why are you selling your current house? Maybe we should keep this home. And have you ever considered cashing out your current home and paying down your new mortgage by more, or balancing two mortgages? Because there's opportunities around every corner if you take a step back and say, how would I approach this if I was the most relentless loan officer I could be? And if a client owns a home and they're looking to buy, what about keeping both homes? Or what about pulling cash out of your home? Because you know in this market, you're not going to be able to put in a contingent offer. So why not cash out your home, buy your other property, and this market's so hot right now, your home will sell like hotcakes in 2 minutes. Maybe just simply doing it the way you will feel comfortable isn't the right move to make. Next thing, if a client's getting a gift, I coach all my LOs that think about the gifter that's connected to that gift. They're probably a homeowner, and maybe the homeowner, probably the parents that are gifting the kids the $30,000, $40,000, $50,000 down payment. Maybe it'd be better for them to do a cash out refinance and use that as possibly the gift. And maybe the cash out refinance can help them save money. I've had so many LOs thank me because they've been able to get refis from the gifter's parents, and they can get the gifter's parents cash out and lower their payments. One extra loan you guys can do by being relentless. And if the client who's shopping that doesn't own a home hasn't found something, and you just let them get off the hook by saying, keep looking, maybe you aren't really digging deeper into their biggest concern and finding out why haven't you found something yet. It can't just be the market's competitive. Maybe the way you're going about it's not the right approach. Maybe their concerns are too tied up with a down payment. Maybe they're struggling by understanding their monthly payment with rates changing, and you're doing them no favors by saying, yep, rates are going up, so your payment's going up. Maybe it's just coaching them through what their struggle is more. But you have to spend your Mondays with these home shoppers being relentless, because what's to stop them from going to an open house, seeing another property, having another agent talk to them, being referred to another loan officer that they close with because you weren't relentless in helping them pursue their dreams and goals. So Dave, any advice on kind of this approach on chasing these Monday shoppers with more relentlessness and more eyes open on what opportunities I might be able to get by asking questions about other loans we can do for them?
Find the pain points. What is painful for them? Man, I'm in this place, but I need a bigger backyard. I need a swing set. I need a pool. What is the pain point? And just be a problem solver. You say, oh my goodness, I could help you with that. Really? You could help me with that? I didn't know you could do that. If you are a problem solver, if you're coming up with ideas that other people haven't come up with, oh my goodness, you're going to have more business than you know what to do with.
You got to know why they're buying and find the pain behind why they're renting. And if the client says things to you like, well, you know what, we're just going to hold tight because the market's going to crash and come back down, then I'd ask them, what makes you say that? And just shut up. What makes you say that? Well, my cousin, okay, your cousin, does he own 40 houses? Is he like some real estate guru? And they came to you for guidance. If they had a cousin that was such an expert, he would have given them a hard money or a personal loan or a trust loan or something. You're the expert. But if you just tell them, oh, that's not going to happen, then you're getting into a conversation. Now, relentlessness does not mean you're argumentative. It means you don't give up until the client gives in. And if the client tells you, well, we're just going to hold tight. Like Dave said, what's the pain? Why are you holding tight? Well, me and my wife are actually splitting up, or husband are splitting up and don't want to do this. It's become a huge fight. Okay, well, maybe I can help you guys. Renting is such a difficult thing for a family. And once you have a home, you're more bonded together. There's ways to get through to clients that aren't just talking about the market. And if they're telling you they want to hold tight or they want to wait, you have to ask them, what makes you say that? And they just might tell you the truth, and maybe that sets them free. On Tuesdays, we want to go after calling our past clients. Stop calling your past clients and saying, do you want to save money on a mortgage? Or do you want to refi and cut your interest rate? Because anybody can do that. They can go on Google and find 5 online lenders to get them a better interest rate than you guys can offer. You're never going to offer the best rate because you earn a commission. Do you guys understand that? You earn a commission and your banks must pay you a commission. So you're never going to offer the best interest rate. There are dozens of lenders that don't pay commissions to loan officers, and they're going to always offer a better or lower rate than you because that's the model. So they come to you for expert guidance and solutions that the person that's just sitting in a call center that didn't go through MEC for training, that just wants to punch a clock, that's a different brand of loan officer. You're on this call to get expert guidance. So when you're talking about someone's mortgage, don't even talk about, do you want to save money? Be like, what's your plan? You know, you're a couple years into your mortgage, you want to consider a 20, 10, or 15-year loan and pay off the deal faster? Ask them, what could you use money for? Don't ask them, do you want any cash out? What could you use money for? Like, these are good questions. Would a 20 or 15 or 10-year loan allow you to pay off your loan faster? If they go, yeah, it would, then go into that term with them. Say, do you need cash out? And what could you use cash out for? See when they're going to be selling their home. Dave, how many homes have you bought and sold in your life?
Too many to count.
Too many to count. Your loan officer gets all those deals irregardless of interest rates. So when you're calling your past clients, and if you aren't calling them because I have this thing called loan officer-itis. You look at their interest rate that they have and you go, oh, I can't help them. I'm not going to call them because their rate's too low. Okay, they just had a third kid. They got to move. Sorry, honey, let's cram 4 kids to a bedroom because our rate's really low on this mortgage. We just can't fathom another refinance. So we're just going to have our kids sleep all in one bed. That's not going to happen. If their life changes, so does their mortgage. And if you're in that situation, you're going to be able to help them. So seeing what they're going to be buying and selling, I have had so many clients, they go, I'm selling my home. I'm like, why? Well, because I'm going to cash out. And I go, okay, well, let's talk about this. I'm not your CPA, but let's just talk about this. You bought for $350, you're selling for $1.5 million. Wow, that's $1 million. I'm going to have a fat check to pay Uncle Sam. What do you mean? You've got capital gains to pay. What do you do with that money? Capital gains, well, what's that? Well, when you buy something and you sell it for a lot more money, government gets a piece of that. Really? Talk to your CPA about it. You know what rich people don't do? They rarely ever sell, because when you sell, you pay taxes on it. If you buy another house and make that investment property, you can create cash flow. So what about cashing out your home, buying something else? Rates are going to go, or rental rates are going to go super through the roof. Now you have a ever-growing asset you can leave your family. Make it be your kid's problem one day. How about retaining the property? Just retooling how you think and having conversations. And then even if they don't move forward, you leave no doubt in the room that you're a qualified expert to make sure that you're looking at the bigger picture with them, which is what you do, which is why you get paid a commission. Look, people say, look, how do I get my cash without paying taxes on it? Well, last time I checked, you can cash out your mortgage. And if I give you $100,000 cash out of your house, you don't claim that on your tax returns. That's money right now that can help you improve your quality of life, pay off your debts, get your cash flow right. And that's instant money that you don't need to pay taxes on if you cash out your home. Find out their next life move. What is your next life move looking like? And homeowners buy every 5 years. So you guys, on Tuesday, time to step out of your shell, be an expert and start talking at a higher level. Nothing to do with interest rates. Let your peers watch the market. You watch the client's best needs because you're their advisor for life. Wednesdays, you guys, it's agent day. Agents are in just as much of a quagmire as you guys are when these market changes. They get caught watching the market just like you do. They're always worried about the next market changing. Educate the agents on Wednesday on where rates are going. Talk about new programs that are out there. Non-QM's a great option. Bank statement lending is a good option. What can you tell an agent that you do better than everybody else? When you're calling a realtor, don't call them and say, hey, I can get your client's loan closed so fast. My name is 15-day closer. Yeah, heard that before. You actually aren't. You can't control how slow the appraisal process is. You can't control when a client drags their feet on paperwork. So that's nothing special. When you're calling an agent, what do you do super well they should keep you in mind for? I don't want all your business, Dave. I just want to be on the team. So I've got this great non-QM loan, Dave, that is for anybody that's self-employed. So do me a favor, whenever you have a self-employed buyer, will you think about me? Because I do very well with that kind of client. Whenever you have a client that's retired, Dave, I do very well with a client because all my clients are retired and I just like slowing things down and explaining things very well. So when you're calling agents, understand that they're just as up and down as you are about this market. You've got to be the consistent person and the consistent sale that sells their ship, and tell them what you do well and stick to it. Understand, and you're talking to agents, ask them, hey, what's your marketing plan this year? How are you going to make more money as this market changes? Know things special about your agents. Understand when it's their birthday on Facebook, you probably know about it. Send them something special. Even a message or text, happy birthday, thinking about you. I'm always here to help you and help your business grow. Most LOs and most agents struggle with the same weaknesses. They're not good at following up. They're not calling their clients, and they're not getting enough referrals from their book of business. So think about this, Dave. The average agent does 1.5 loans for, or 1.5 escrows for a buyer or seller, and that buyer does 10 deals in their life. So it's safe to say that most agents don't get enough repeat business. So ask your agent, are you getting enough repeat business? For example, if I was to go through an agent and I was to buy a home, that agent thinks, okay, in their mind, I'll be there for 10 or 15 years, but we know I'm going to be there for probably 5 years. Let's say when 5 years comes up, if that agent has not been dripping and consistently talking to that client, what's going to happen, Dave?
You're not going to call them back. Heck, you totally forgot even their name. Never mind that you had a 5-star experience. You don't even know who they are. You don't even remember them.
Yep.
If you don't follow up, out of sight, out of mind.
Yep. So ask them, have you called all your clients from last year's closings to wish them a happy new year? Here's what happens, Mr. and Mrs. Agent. What I've noticed, the clients that are buying a home from you today are giving you one deal. I think that you're missing on 3 other deals in the next 5 years. Can I explain to you why? Well, sure. Because in 4 or 5 years, they're going to sell their home, most likely. When they sell their home, they're going to buy another home. There's 2 deals right there that they're about to do at the exact same time. When they go out there and sell their home and you have the listing, you can likely also attract the buyer for that home. So you're potentially losing 2 deals on their sale and 1 deal on their new purchase. So I've noticed a lot of my agents only go 1 for 4, but those that talk to their clients every single year or a couple times a year get 3 or 4 more deals every 5 years from a client. So how are you staying in touch with your clients? How is your CRM? How is your marketing? How is your stay in touch campaign? If it's not good, maybe I can help you stay in touch with your CRM. Maybe there's bomb videos. We could do a bomb video every year together. Hey clients, this is Ben, I'm with Dave, my great agent, and maybe you can introduce the agent to your community and they can introduce them to you to their community. But just asking agents where they fall short and staying in touch with them. Thursdays, I love Thursdays, and I'm gonna show you guys some examples of how we do it. The average LO gives up after 1 or 2 attempts to get a client's business, and that's not relentless. The most important thing is being relentless. So if you'll zoom in on this first text on page number 14, the borrower's name is Alba. And as you can see, our team in 2020 asked Alba, how is this stuff going? Here's the story about Alba. Alba came to our team to get a mortgage in 2020. Alba in 2020 didn't move forward, as you can see throughout these texts. We messaged her, we texted her, we took out all the text in the middle so it wouldn't take up the whole page. There are pages and pages, maybe 15 or 20 texts that go back and forth between us and Alba, where Alba does not move forward. Finally, we got a hold of Alba Monday of a couple of weeks ago. Finally, after chasing her down, we asked her, how's she doing? We finally got her on the phone. Alba tells us that she's good and her mortgage is at 2.99%. Our team tells her, Alba, our records say that you're at 3.99%. Would you please go look at your mortgage bill? And if you're at 2.99%, you're good, but we believe you're not. And she goes back, and as you can see in this text she sends to our team, she goes, it is 3.99. Pretty shocked because I could have sworn it was lower. To that point, we text her back. Yes, that's what we tried to tell you. A year ago, we tried to get you a low rate and you disappeared on us. Can we now finish the job? She says yes. So because we were relentless in pursuing the client, she gave in and now our team's going to close her mortgage. Another example on the right side is Goodwin. As you can see, we're asking him about a mortgage. He tells us he's at 3.25, which basically means I'm good. He's a jumbo mortgage borrower. And we keep telling him over the course of the next 20 texts over the year, let's just talk. Maybe there's more things we could do to help you. How's your life going? And he disappears and ghosts us. Finally, we text him, good morning. This is a recent text my team sends to him. Are you available this week to chat? And he says, sorry, it's been busy. I've been crazy. Long story short, he's a jumbo borrower. He wants cash out and doesn't care about rates, has bills he wants to pay, wants $300,000 to cash out, and wants to give our team $1.5 million deal. So just when you think the client doesn't have a need, they do have a need. And Thursday is for about chasing people forever and never giving up. Your thoughts on this, Dave?
That's the thing. They don't care how much you know until they know how much you care. You wanted to help Alba. You wanted to help Goodwin. You stayed in there, stayed in there, stayed in there until they went, oh my goodness, absolutely, I need you. And you were right there when the need was present.
And that's the ticket, guys, is if you spend 4 hours a day chasing your clients and showing them that you care and showing them it's not about the mortgage, it's about their needs, and understand that their next needs are right around the corner, and realize that refinances never go away because clients' needs do. And refis lead to home buys, and home buys lead to refi. You can't be a refi loan officer, and you can't be a purchase officer. You have to be a loan officer. And a loan officer understands the client's needs and doesn't give a rip about the interest rates, because this guy that has bills to pay and has to pay for college and has kids going all over the place and has a business that has trouble needs cash. And it's not like his bills are going to go away. And what's a quarter or a half a point in the grand scheme of his life? It's not. And Friday, I'm on page 15 now, is for finding 5 loans per week where there's a benefit to the client. Take a step back and look at your database, look at your clients. And this is your hot list needs Friday. Find needs that have nothing to do with the market and chase those clients. Clients that have a HELOC or have opened up a credit line. Guess what? When rates rise, they're going to feel that pressure. When clients that have mortgage insurance from when they bought their home, they need to get out of the MI. Clients that are in adjustable rate mortgages, clients that are in between terms, 20 or 15 or 10, clients that have lots of rentals. Maybe their tenants stopped paying them from COVID. Have you thought about that? Maybe they have a lack of cash flow from COVID from their rentals and they need cash out. Or maybe there's deferred maintenance on the roof of their rental, and that means they can't get enough rent for their property. But you're so concerned with the interest rate, you have such fear of rejection that you won't call your clients and say, how are your rental properties? Any deferred maintenance you have? Anybody not paying you from COVID? My father-in-law had a rental properties for the last 30 years. He had tenants for 30 years, and his tenant just finally left and the house is destroyed. Now he's having to go in there and fix the property. It happens. Maybe these are cash out people and the last one you gave them was a cash out loan. And these cash out clients are always going to have high credit card balances because they have a shopping problem. And you have to always be on top of them to help them with their shopping problem. And Friday is all about finding people with needs that supersede the market. And that makes you an expert. What do you think about being an expert in this realm, Dave?
That's exactly. I mean, as you're talking about, that's exactly the situation I'm in. I have a rental that I just bought in Florida, another one. And with this rental, the previous owners were only getting $199 a night. I got with an interior decorator. The interior decorator says, I need a budget of about $60,000. And I says, cool, what are you going to do? Well, the previous people never had any money, so they never upgraded anything. The AC, the water heater, it's 15 years old. I need $60,000 and I can get you $450 a night in rental. Oh my goodness, right? That I was thinking I don't need to do anything because it's nice, but this person coming in, the property manager, is kind of telling me we can go from $199 a night to $450 a night. Ask me if I have, if I really care what the interest rate's going to be. I really don't, because if I'm going to now double what my revenue is based on this rental, see, now you're bringing to, as you're talking to me, you're bringing to my mind, oh my goodness, yeah, I do need some money to do that. Now, what about my other rentals? Should I do that so I can increase the cash flow on those? See, now I'm thinking about it where I thought, no, I'm good, I'm fine. And now you brought it up to mind and go, wait a minute. Because they said, hey, we could spread it out over 6 months, or we could do all of the, the upgrade and make it really, really nice and, raise the rents now as opposed to, half a year later. I'm losing out on a half a year's worth of rental income, right? Because I didn't do it now.
And think about that. Let's say I'm your loan officer. I'm like, look, you got equity in your home like you never had before. $60,000 out is going to mean, look, do people really want to be in a fast mode to pay off their mortgage? Maybe not. Going from a 27-year to a 30-year is not going to disrupt their life that much. So let's say even if the rate's a little bit higher, but they've been paying it down for 3 years and you cash them out, the payment might be the same. And so if you look at it like cash flow is most important to people. and comfort of life is most important to people, not their interest rate. And people say, the rate. I'm like, when's the last time you wrote a check to Fannie Mae or to Chase and you wrote in the column the interest rate or thanks for the rate you gave me? It doesn't matter. It's a dollar and cent game, not an interest rate game. Let everybody else watch the market. You sit there and cash checks. See, the thing about this is that the more seeds you plant, I'm on page 16, the more seeds you plant, when rates go up, the larger your crop will be when they come back down again. And if you finance all Dave's properties at 4.5%, and then a year later, I can knock on Dave's door and be like, hey, you want 3.99? He's gonna say, absolutely, that's more cash flow I have now. But if you don't put more seeds in the ground, you're not gonna have the crops to get rich and successful when rates come right back down. And you guys, like, this is what I love to do, and I love being on these calls with you guys. And I know we're running short on time, and I want Dave to kind of close this out, but there's like more to this story of getting your mind around stopping to live in a place where you think it's not possible and thinking that progress is possible if you change your perspective on the business. And I know I just want to close with this. If you guys are wanting more of this good positive juice, and this is a basic academy lesson, guys, jump in. I've got an academy. It's on the last page. It's the BA365academy.com. And it's like 97 bucks a month. And we give you guys like 10 bucks off or something like that with MEC. If you want more of this, and I can't get you guys to come to like this every week, because it's a every few month call we do, then jump in the academy, you guys. Don't wait for tomorrow to change. You got to change your business model today. And Dave was nice enough to get you guys on here. We got a promo code for you guys. It's MEC VIP. And I'm not selling you on the academy. I want you guys to do great at mortgage, and I want you guys to further your guys' career. And this is so much more fun when you're making so much more money. And the tools I'm giving you guys today are just things that I've learned over the years of fighting and being relentless and not giving up and not letting the market control your mindset. And I mean, Dave, you've been so great and kind and gracious to give us your time. I know you're busy, but why don't you close this out and tell us a couple things you think are good takeaways for your team to go out there and crush it today with?
Guys, like Ben and myself, we've done this over many, many years. We like Ben Anderson. He wouldn't be as successful as he is unless, he's absolutely, Ben, you're not going to brag on yourself, but I will. One of the top producing loan officers in the nation. And it really doesn't matter about interest rates, whether they're going up, down, whatever. It doesn't matter. If you're solving problems, you're going to get the business. Heck, I'm sitting here thinking, yeah, I'm good. I'm a loan officer. I'm good. And yet you brought up stuff, right when I'm sitting here, I'm in the business every day. And you brought up stuff where you go, well, wait a minute. Yeah, maybe I do need another loan. We really appreciate all of the students that go through MEC. And so we're trying to provide added value. And so we bring superstars like Ben Anderson here that will share stuff. And then, we always ask, and Ben, Ben knows we're going to ask, great, what can you do for our students? What can you do to give extra value to our people? And so that's why, we get the discount, we pass it on to you guys, and we hope that you guys will take advantage of programs and opportunities like this. Let us know in the chat, what do you think? Did we do a good job? Did Ben provide something of value that you go, you know what, I think I can get another 1-2 loans a month out of just this short time I've been visiting with everybody? If you feel that you got value, really, really cool. We appreciate you. Ben, I don't want to take all the time. I mean, I know we're almost at the top of the hour. What do you want to say?
I mean, the best years are yet to come. The downturn leads to those that rise. And I hope that I've given you guys enough value to get one more loan today. It's just, for me, it's about the daily disciplines, and anybody can do the things I'm asking you guys to do once, but can you do them every day? Can you repeat themselves? And those that follow these things I'm showing you guys, these people make multi-million dollars a year. You're asking, what do the 1%ers do if you're new in the business? I'd always ask myself, what's the best of the best doing to make the most of the most amount of money? And it's in this lesson plan. So download the attachment and take it with you and read it back later. And if you can put these things into practice, then you'll be making really good money. And that's all we want. because if you stay in this business and make really good money, you continue to come back to MEC for more education. So we're a team. Dave and Anthony do a great job getting you in and keeping you in. And when they give me some time, I try and do a job of getting you guys to the next level. So I just like hanging out with you, Dave, and sharing the screen for even an hour makes me smile because you're just the happiest guy. That's all. Well, I heard it say one time that there's neurons that connect your face to your brain, and when you smile, your brain's happy. When your brain's happy, you make a lot more money. So my takeaway from you is, you're always smiling in a good mood, and if I can replicate that smile that you have, it's gonna be great for me too.
Hey, I want to thank everybody for joining us today. Please take advantage of these things. And I know at top of the hour, we're trying to be mindful of your guys' time. We appreciate all of you. And for Ben Anderson and mortgage educators, everybody have a really, really good day, okay? See you later.
Hey guys, bye Anthony.
Take care.